Victor, the market under pressure for the full of the last week, losing for 5 days, shedding 329 basis points. Not a good start to this week. On Monday, the market shedding 2.2%. Volumes also severely depressed, $5 million on Monday. Do we expect this trend to continue as the market reopens today?
Well, indeed, the market has been under pressure, like you noted. A lot of it obviously on account of some of the more global challenges with respect to growth and opportunities across the leading markets. It stands to reason that given that a good chunk of the activity in our market on the bourse is driven by foreign institutional investors who are obviously concerned with what is going on in the more developed markets where they've got a lot of their stakes. We'll be watching keenly to see what happens in these markets. Indeed, we expect the pressure to continue today, but then again, a lot of market activity, like you noted, has begun to taper out. Volumes were down significantly on Monday, so we expect that there will be largely a lot of standby activity in the sense that we will not see much activity on the part of these investors today.
Where could we see most activity on the stock exchange, given the fact that we've seen a generally broad-based sell-off, especially in the banking sector?
The banking sector obviously continues to present challenges. We've seen a lot of sell-offs, despite the fact that there seems to be a lot much greater clarity as to the direction of the reforms and in terms of a timeline for a smooth cut-off, as it were. And the concerns also have spread. The banking sector depressed sentiments in the market, and we've seen that spread to even the more stable consumer goods space, as it were. Significant downturn on Monday was driven by Dangote Cement, for example, which in our books is a stock that one should accumulate at the moment. But then again, there seems to be a lot of concern generally over the performance of the bourse, and that has informed a lot of revisions by a good many analysts.
Let's take a look at Dangote Cement, because that stock has been under pressure in the past few sessions, as you say, falling by the maximum 5% on Friday. Is that a result of foreign investors pulling out of the stock, of course the largest listed stock on the exchange, or is it company-specific details? There are some uncertainties over when the company will issue more rights. It is only listed. It has only listed 5% of its stock to date, and it is mandatory that it lists around 25% of its stock by next year, September.
Yes, indeed. The concerns with Dangote Cement, in our view, are not necessarily in tandem with the general overhang with respect to the market. I think some of it is more company-specific, not necessarily from a performance or operating standpoint, but I think a lot of it is driven by concerns with the liquidity and obviously the free float. As it were, Dangote is, like you said, only listed to roughly 5% of its total shares outstanding. That obviously has to rise to 25, based on the trading rules.
And management hasn't given any indication of when they are looking to issue that new stock.
That precisely is the issue. There hasn't been very much communication on that singular note, much unlike you find with respect to the results and performance. But that said, the guidance that was issued at the time the stock was listed gave an indicator to the fact that we expected that process to be completed sometime next year. And included in this is potentially a listing on the London Stock Exchange. The timing, size, and a lot of other details and specifics that go into this have not been communicated by management, and I guess that is potentially why we've seen significant, sell down, like you noted, on the part of foreign institutional investors.
Victor, very quickly, it's a spring day, of course, today, and at CNBC Africa, we're focusing on green business initiatives. Over in Nigeria, is there an increasing focus on issues around sustainability and addressing sustainability as the economy surges ahead and powers ahead, growing by expected 7% this year? Because we've seen in the likes of Kenya, with the growth of the renewable energy sector there, of course, renewable energy feeding into that grid. What type of prominence is green business given in the minds of the corporate sector in Nigeria?
I think, and this is my personal view, the concept of green or sustainable business is still pretty much in its infancy in Nigeria. a lot of corporate executives, perhaps in my view, are more focused on sustaining the business itself and ensuring that profitability and robust earnings growth is for them the key focus, as it were. But then again, that said, there is some level of there is increasing awareness basically on the concept of green business or green energy use. As part of the reforms to the energy sector, and given what is going on with the power, focus on power and improving power supply in Nigeria, there are people who have voiced concerns regarding the use of fossil fuels and perhaps depending on gas as a singular source of energy driver. So we're beginning to see a little bit of diversification, but then again, we recognize that there has been very limited application on a wider scale for green technology in terms of large-scale power generation. So perhaps that is potentially why it hasn't gained as much traction.
As we've seen on the east of the continent. Thank you very much for joining us this morning, Victor Ndukauba, Head of Research Group at Afrinvest.